Welcome to World Market Media, your online source for the latest news on today's hottest small cap companies.
Hi, I'm Tom Copeland with World Market Media, and you're watching a video interview here with Chris Jarvis. He's the founder and president of Caprock Risk Management. They're an oil and natural gas industry experts who frequently appears on CNBC. And hey, Chris, how you doing?
Good. How you doing today?
Doing great. Thanks for asking. It's been a heck of a month, huh?
Absolutely. It's been a wild month across all markets, including the commodity space for sure.
Let's talk about that a little bit. Let's get right into the commodity space. Now you're a natural gas and oil analyst and reporter, and I'd like to just maybe talk a little bit about the premiums that you're seeing in those prices relative to the hurricane season that we're stepping into.
The report came out today from NOAA. To use their headlines, they're stating that this could be one of the more active on record. Headlines such as that definitely catches notice for market participants. I mean.
Sure, and speaking on the debacle in the Gulf, which it certainly is, I mean, it's an absolute tragedy. What's your view on this disaster? Maybe just taking an aggregate view on it as a an industry analyst. How do you see this being different from maybe other oil spills? And further, what does this mean for offshore drilling going forward in America?
Well, I think this is very similar to Katrina. I think you had one of these 1-in-100-year events in 2005. I think right now with the significance with BP, obviously there's going to be some environmental damage up and down the Gulf Coast and likely up the eastern seaboard, but I think the longer term ramifications of this incident will be, again, just like 2005, you're going to see insurance premiums and rates really go through the roof because, when they start adjusting for risk, obviously, we had a 100-year event with a spill in the Gulf this year. Nobody had expected it to actually get this far out of hand, and so I believe you'll see an additional cost and more costs associated with it.
Sure, I wouldn't want to categorize you as a political analyst by any means, but could you talk a little bit about maybe what this, has the sentiment changed for offshore drilling? I mean, it seems like it could be going forward.
Well, I tell you, it's like I said, it's a very intensive, it's a robust area for supplies for this country. There's no doubt this country needs to have activity in the Gulf of Mexico. Problem is you're going to be taking marginal producers offline because if costs go up, that's going to drive some of these smaller players unable to really keep up with this cost increase unless prices of energy go a lot higher. And given that, I think out of DC, you're probably going to see some more regulation and oversight what's going on offshore, which will be an additional cost.
Sure. Do you see this overhaul of financial regulation? It looks like it's got some steam going. It looks like it's got some serious momentum up there in Washington, and by June we could have it on the president's desk. Do you see that the overhaul of the derivatives market? Do you see that as being good for your company, bad for your company? How do you see this?
I think if it's not, if you take a look at the regulation coming down in the derivatives markets, they're really targeting 3 or 4 very large-scale players on the speculative side that can sometimes really dominate these markets, especially the natural gas market. It's much thinner than the crude oil market. I'm fine with that. I think it actually will enhance, certain players' ability to kind of move prices at will in that market. But the same token, if you're a hedger, you want speculators in that market. Speculators play an extremely important role for physical producers to actually hedge. It adds liquidity, and you get better price discovery. So as long as it's really targeted at 3 or 4 people and not limiting the market's dynamics or how they should be functioning, I think long term it should bode well. If the regulations continue to get strengthened or get too restrictive, then at that point I do think it would be a disservice to the market.
Well, that's some great information. Thanks so much, Chris. I'm speaking with Chris Jarvis. He's the founder and president of Caprock Risk Management. He's an oil and natural gas expert, and he frequently appears on CNBC, and we appreciate you taking the time to come speak with us today.
All right, thanks for having me.
Hey, our pleasure. And follow us on Facebook, Twitter, and WorldMarketMedia.com, and keep trading those trends.